Good morning, everyone, and thank you very much for joining me. This is the morning market review, and it is Thursday, the 14th of September. My name is Russell Shaw. I'm a senior market specialist at FXM, and I just want to highlight my email address, rshaw@fxm.com. And of course, if you'd like to correspond, that's the email address to use. Just going to go ahead and bring up our disclaimers. We'll start off with the high risk investment warning. I'll keep that on screen for a few moments. I want to welcome you all to the webinar. Thank you very much for signing in. Good morning, Kim. Pleasure to have you on the webinar. Hey, Raj. Good morning to you. Morning to everyone who signed in this morning. Just keep that high risk investment warning on for a few more moments. All right, here's just the market commentaries disclaimer. Good morning, Howard. Lovely to have you on the webinar as always. And just our references, MarketScope 2.0 and TradingView.com. Just want to give you guys a heads up what's going to be on the calendar for today. You're going to get the ECB announcement. They're going to come out with their policy statement at 2:15 p.m. ZA. That's 12:15. Sorry, 1 UK. I'm losing my mind. It's 1 UK, 2:15 ZA. And we're going to have the press conference at 30 minutes later at 2:45 p.m. ZA and 1:45 p.m. UK. So that's going to be one of the big announcements for today. It's really touch and go whether there's going to be a rate hike. There was an opinion that there was going to be a hawkish hold, as they say, and then there was a leak with regards to inflation, which seems to suggest that they will go with a rate hike. So just be aware that if you are trading any euro pairs, that's going to be coming out today. Also, we're going to get US retail sales and the PPI coming out at 2:30 p.m. ZA, 1:30 p.m. UK. So I think those are also important. Yesterday we did see the CPI, and CPI came out higher than expected. I've actually got the CPI out on TradingView. I'll just bring that up for you guys to take a look at. And it's kicked up. This is the headline number. It's kicked up. We still do have deceleration of headline inflation. That's good. The deceleration over here. Okay, and I'll just put the border in. And as long as we maintain below zero and there's that deceleration, I think we'll be okay. If it pops up above zero, you know, we could be at an inflection point where, I mean, the low-hanging fruit has all been picked, right? All the variables that we're going to respond to the Fed's rate hike, they've all responded, and now there's a bit more of a stickiness, a bit more of a fight on the Fed's end. Remember, trying to get to 2%, okay, we're at 3.7 on a headline basis, and we may be getting sort of a point now where there's a real battle to get below 3%. Let's just take a look at the inflation on a core basis. So what we'll do here, I think this, if I change it to C, no, let me just type it in. Let me try that again. Okay, here core inflation. This doesn't look quite right. Let me try that again. Yeah, here we go. That's better. At 4.3%. So the core, sort of, we're seeing the movement down. What tends to happen is the central banks focus on the core, but they're looking at really, when they say they're targeting 2%, they're targeting that on the headline. A little bit of stickiness coming in there. What happened yesterday, if we bring up the US dollar, it actually it ended up for the day, but it was a battle, and we saw gold come down as well. I think the PPI is going to be interesting. Now, what is going to be tough for today is that ECB announcement. If they come out and they are, I think either which way, I think that the US dollar may get a bid here. Either we get that hawkish hold or we get a dovish hike. I think either which way, we might see euro pull back. If we see euro pull back, I think the dollar is supported, and I think gold pulls back as well. But that's hypothesis. I don't know how the market's going to react. What we need to do is not predict, we need to react. Okay, it's something that we've constantly talked about. What I think is interesting here is if we go back to the weekly, and we should know this chart now fairly well, is we know we've got an uptrend in US dollar because we've got the higher trough, higher peak. We know that it's above that 30-week exponential moving average, and importantly, that exponential moving average is pointing up. We use that as a filter, and then the RSI above 50. So we know that the dollar is generally strong. If we go through to our daily chart, we are in zone 1. So we're in that upper red, upper blue, which is the bullish areas. You see, if there's going to be an up movement, it must take place in zone 1. Okay, so we're still in zone 1, but we've got that red that started to come in today. And that is effectively, remember, we look for the dips in the uptrend. So again, just want to reinforce what we look for in the webinar. We look for the primary trend, which we've looked at now. The dollar primary trend seems to be up, or the pressure seems to be up. And then we understand that the secondaries, the instrument's never going to move in that straight line. We know that. And if it doesn't move in the straight line, then it's the pullbacks that become the exciting parts for us, because it's the dips which we try and exploit. And going back to the dollar, okay, is, well, it looks as if we've got some red in zone 1. Go down to that hourly chart, and you can see the support here seems to be at the S1 level. Okay, so a lot happening on the markets today. Whenever there's a central bank, particularly Fed, but in this case ECB, we have to be really careful as traders. And we just want to see if that S1 level holds, and if we get a bullish crossover in the EMAs, and potentially there's the dip in the uptrend. Take a look what's happening in the stochastic. Stochastic has already crossed over, but okay, it really needs to get to the other side. It needs to get to the upper quintile to show underlying momentum. Okay, so it's going to be very interesting seeing how this ECB, either a hawkish hold or a dovish hike, does that affect ECB? Does it pull euro, I beg your pardon, down? And if it pulls euro down, do we see a bounce up in the US dollar? And let's take a look at the euro itself. Okay, we're just bringing that across. And what we have here is a mirror of the US dollar. Okay, so we've seen this lower peak, lower trough. It's below that 30-week moving average. That 30-week moving average is pointed down. Importantly, that's what we're using as the filter. And then the RSI below 50. Which zone is it in? So we go through to our daily to do the zone analysis, and it's in zone 3. Remember that what we're trying to do with weaker looking instruments is we get the primary trend, okay, or the bias, okay, to the downside. If we've got that, we know they're secondaries, intermediate trend, something like that. And there, what we try and do is catch the rallies. Okay. So potentially, now we take a look at the euro. There's a bit of blue. Maybe that's the rally. But be careful, we don't predict, we only react. There's a very important ECB meeting today. Go to the hourly chart here. And what we want to see is we want to see the EMAs turn down and cross bearish. We want to see the stochastic cross down. And if that happens, okay, we want to see the momentum also move to the lower quintile. Now, what I would expect is that when President Lagarde is speaking, there's going to be a ton of volatility. So just be very, very careful there. It's a high risk event. Let's take a look at just to see how gold's tracking. But before we do that, I just want to go through a few other things we have to know. There is a big listing. There's a big IPO in the States today. It's the ARM Holdings. Okay, so just be aware that ARM is listing today, and we'll talk about it when we get more price action there. Okay, and then let's just take a look at gold, and then I want to take a look at oil, because oil was one of the reasons that headline inflation starting to be sticky. So what happened is that the inflation rate came out higher than anticipated. Take a look at where we are in terms of gold. We've got a lower peak followed by the lower trough. I've put in this green downtrending line just to get a measure of the momentum. It's testing that momentum now, but the line is holding. And take a look what's happening here. I want to zoom in. Let's just clean this up. I'll take this label out. We've got a potential lower peak coming in on gold. So here would be the reference candle. Here's the reference candle, because we're looking at the highest high in at least 3 candles. And then it looks like we've got condition 2, that is price moving below the reference candles line. Looks like we've got condition 3, a close below, but we won't know if we truly have condition 3 until the end of the week, because there's a weekly chart. So the weekly chart's only going to close at the end of the week. But it looks as if we might be getting another lower peak here in gold. Well, if we're getting a lower peak here in gold, that would suggest to me support for the greenback. If there's support for the greenback, that's got ramifications for all the majors that we're looking to trade. Okay, so just be aware of that. If we take a look at where gold is in terms of the zones, okay, it's slipping towards zone 3. It's slipping back towards zone 3. If it crosses from zone 2 into zone 3, that's relative weakness. Okay, where is the momentum? Momentum's below 50. Okay, it's weak, so there is a lot of pressure on the yellow metal. If we go down to the hourly, okay, take a look what's happening here. Take a look what's happening here. We've got the cross. There's trigger 1. There's trigger 2. And here is the lower quintile. If we get into that lower quintile and it holds in that lower quintile, we potentially get the swing. The magic happens in the upper or the lower quintile, depending if we're looking for longs or shorts, right? Take a look here. Here is where it holds the lower quintile. Well, that's a serious move downwards. Okay, that's where so we're kind of moving towards that lower quintile, 20 or minus, the 20 minus levels. So there does seem to be some pressure on gold. Again, dual analysis, go back to the US dollar just to confirm that the US dollar is picking up as well. And we just need to see, we don't want to predict, we want to react. Okay, so we just need to see some more development on the greenback side of things. Okay, just the final two charts. I want to take a look at oil and I want to take a look at DAX. Let's just bring up oil. One of the main reasons that there were basically two reasons for the higher CPI. One of them is called a base effect. In other words, the base, we're starting off at a base where price is coming down, and then that's going back a year ago. And the second is oil. If you just take a look at oil, it's been, let's take a look at it on the weekly chart. It's just been absolutely rampant. And oil feeds into headline inflation. Okay. So you can see there is a very strong trend here in oil, higher trough, higher peak. Go down to the daily chart. We're in zone 1. The one point to just make here is that we are overbought. So if you're trading oil, just be aware that there is an overbought condition that's going to have to normalize. I think that would be a dip in the uptrend. Okay, go down to the hourly. We do have the crosses here. There's a bid on oil. Okay, there's excitement with regards to the oil price, but at some stage, it is going to pull back just for that daily to clear. I think that pullback, when that daily clears, potential dip in the uptrend there. Last chart for this morning, we'll take a look at the DAX. Let me just see. There's also some comments coming through. Do the big institutions know before the announcement? Do the big institutions know before the announcement? So do the big institutions know what the announcement's going to be, Kim? Is that what you're asking? So do they know if there's going to be a rate cut for the ECB? The answer to that is no, they don't know. But they definitely control the market. They are poised. They'll put in their orders before the announcement's made. Liquidity basically will come right down because all the orders will be put in beforehand. It will create a vacuum, and then you'll get the that vacuum full as soon as the announcement's made, as the institutions start amending orders, taking profits. They move very quickly, much quicker than retail traders, much quicker. They've got just much faster systems. So they'll control the first 15 minutes of the announcement. Do they know before? No, they don't. They just act much quicker than we do. Let me know if that helps. All right, let's just take a look at DAX. All right, DAX is on this support. I want to take this out. DAX is looking very similar to gold at the moment, just over the last few weeks. What do I mean by that? Well, remember we said that gold's potentially coming in with that lower peak. Well, yeah, something similar happening with the DAX, in that it looks like we're getting this lower peak here, and we're only really going to know. I would put in the line in the sand over here. So if we close below that for the week, then DAX has all of a sudden moved into downtrend. You're going to really see that the RSI is below 50. You take a look at the daily, we've just slipped. We've just slipped into zone 3. Okay, so we've gone now into the bearish area, the bearish channel. RSI is below 50. Take a look what's happening on the hourly chart. It does look as if we're getting a sell-off. Okay, so the market's opened. It's going to be quite volatile now. We're 4 minutes into the cash open. A lot of the algos and pent-up orders being triggered at the moment. When it settles, we'll be sort of more able to assess direction, better able to assess direction, beg your pardon. And then you could just see though that we do have the triggers down. And if we hit this lower quintile, we're going to get a potential swing. Take a look what happened the last time we hit that lower quintile over there. Get pushed down. Okay, so the magic happens in the extremes. All right, so that's as far as we'll go this morning. If there's any questions, go ahead and type those in. Any other questions, go ahead, type those in. All right, nothing coming in. So I think what we can do is we can stop over here. Have a great day ahead, guys. Great evening. We'll chat tomorrow morning. Thanks very much. Cheers.